folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated? Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
What's going on, guys?
Good morning.
Welcome
in.
How have you guys been doing this morning?
Already got people in the chat. we got much anticipated event here. People joining in early. Gotta love it. I claim the fake universe.
My lips are gonna be brown by the time we're done here. Gotta get my coffee. Get your coffee, get your tea, get your juice, whatever gets you going. You're not gonna want to miss out, guys. We have a full plan today. We're gonna be going over essentially the day in which we started trading over 6 years ago, and we're gonna kind of just go through sort of like a day in the life, but also like almost like a year in the life, if that makes sense. We're gonna be going over our entire story. Trust me, it's not gonna take 3-4 hours. I promise we'll be out of here in like an hour, hour and a half. However, I want to go over pretty much everything that we have been through since the start of our trading journey and how that can relate to where you guys are right now and how we can go about helping you solve the problems that seem to be holding you back in trading success. But at the same time, of course, we're going to be giving away a $100,000 live funded account. We're not only going to just be paying for your 100K challenge, but we're going to be passing that challenge for you guaranteed. And if somehow we fail that challenge, we're going to be buying you another one. We are guaranteeing you a funded account to a lucky winner here. Definitely stay tuned. I'm not going to tell you when we're going to do it. It's just going to be at a random time throughout this webinar. So you're going to want to stay for the entire thing. Could be right now, could be in 10 minutes, could be in an hour. Who knows? So I'm not sure if anyone out there, Aiden, I don't even know if anyone has ever given out a 100K funded account. I know people probably giving away like maybe a 25, 50K, maybe a 100K challenge, but not a funded account. Like that's insane.
Yeah, I don't know if I've ever seen it, but I could be wrong. But anyway, I think it's
celebration
really
of 3 years. We have just hit the 3-year mark. Well, just about a couple months ago, hit the 3-year mark with Ariel Fx and also our really highly anticipated prop firm automation service that we just launched about a month ago. And that's really taken off. Like you guys like absolutely are killing it. You guys are loving it. It's awesome.
We're probably at near 10 million in funding now in just a little over a month, which is extremely powerful.
Yeah, very powerful.
Life-changing opportunity there with that service. So super thankful for it. And where's everyone from this morning? Where's everybody from? Put it in the chat. I see Indonesia's in here. Got South Africa. Where else? What we got?
Let's do it.
I recognize many of these names. Thanks for coming back, guys.
Let's see. Let's just give some shout outs here. What's going on? Jay, Andy, Samuel, PJ, good to have you on. Clint, Scott, Kingsley, Jen and Jared, remember you? Definitely. Maurice, sorry if I can't pronounce you guys' names. I apologize. Kevin, Edwin, OT7 Capital, nice to have you on today. Appreciate the love and support, guys. This may not be the only time we do one of these giveaways, so stay tuned. Who knows? Maybe we'll do a
do it regularly.
Yeah. It definitely is a struggle to get funded for those who are not already consistently profitable. You know, just looking back, I mean, I don't even know. I probably spent probably 5 figures on challenges back in my day. I mean, Aiden and I used to sit at our college dorm room just trying to pass challenge. It was ridiculous. And we're going to go through this entire story, guys. We're going to teach you exactly kind of where we were, how we sort of gained the confidence and gained the experience, and what we did to kind of push through that barrier. And it really help you guys understand the big problems in psychology that really truly matter. They're not just there that it's like, oh, okay, well, if I just try my best, maybe I can, you know, overcome them. No, it's something you have to overcome, or it's really going to be difficult for you to succeed. So we're going to give you a couple tips and tricks in order to kind of go about doing that. But yeah, we got Nigeria, India, Canada, Thailand, Serbia, Somalia, South Africa, Melbourne, nice, Australia, Ghana, Netherlands. Awesome, guys. We're going to get started here in about 2 or 3 more minutes. I'm going to wait for a few more people to join, and we will get started here.
Yeah, they're saying no one's ever seen this type of giveaway, guys, and that's why we wanted to do it. And, you know, we have confidence in passing these challenges. We haven't failed one challenge yet with our service, and so it's just another way for us to give back. Appreciate all of you guys, your love and support, and for always coming back and hopping on these lives with us.
Yep, it's definitely a very big problem in this industry is getting funded. And if we were able to buy a challenge for someone and pass that challenge and start them off in a funded account, I mean, it's awesome. Even if you make 1, 2, 3% in the first month, it's awesome. Yeah, that can be life-changing right there.
Absolutely.
Let's see, we got Minnesota in the house. Let's go. Atlanta.
Atlanta.
Any of you guys from like the East Coast of the U.S., have you guys been getting like storms lately? We had hail the other day. Raining hail, like full-size hail. Nuts.
Have you ever seen hail before? Is that your first time seeing hail?
No, but this doesn't come down that often here.
Nate sent me a Snapchat video of the hail yesterday. He's like, "Look at that! I think that's hail."
Yeah, I'm a hail virgin, so that's all right.
Hail exists.
Let's go. What happens after you pass the challenge for someone? I still need to know how to trade to keep it going. Well, so there's only so much we can do, guys. I mean, we're going to be giving away for a funded account. You know, they're not going to be, can't really hold your hand here and guarantee that you make money on it. It's just, I mean, come on. No one's ever done this before. So, I mean, we're doing this out of our own pocket. Everyone wants more. Can't ever give enough.
We got like $1,000 out of pocket. North Carolina, Matthew Jumper. Yep, that's where Mr. Nate is. North Carolina weather is insane.
Yeah, you get like all 4 seasons in a week.
Yeah.
Oh yeah.
Man, I think I need some more coffee.
Yeah, you probably do.
I'm gonna have to run and get some.
All right, we have, let's see, about 130 people on. I'm sure people are going to be trickling in as we go. Oh,
yeah.
110. Okay. All right. Well, we can go ahead and get started here. I want to hear from you guys first. I want to kind of start this off by asking you guys, how did you, just very briefly, you don't have to type a paragraph, just very briefly in like a sentence or two, how did you start trading? What got you into trading? What was your first day or first week involved in the markets? And how was that like? How were you introduced to it?
I know everyone's got their story. Everyone has a vivid memory of when you first started trading and what you were doing. Lots of good stories. I already know.
Yeah, we have a lot of IMLs in here, I'm sure. MLM.
IML.
Don't worry, all this is going to tie into psychology, guys. I promise. This is everything here we ask is for a purpose. I promise.
Wow, economics class. Someone learned trading in school? That's a shocker.
Mm-hmm.
That's a first.
A lot of IMLs in here, or IM Academy, I suppose. Facebook ads, binary options. Nice. At a yard sale. Interesting. I'm sure you guys have probably, if you can, you're sitting there right now and you can look back on that time when you first started. And I'm sure there will be times in which you just crack up laughing for how like dumb you were back in the day. I sure can reminisce on those times and just kind of laugh. Because it is funny to go from a beginner to where you are now, whether that be, still a beginner to relatively profitable. It's still funny to see the kinds of things you did when you were first started. This is funny, guys. You guys have a lot of fun.
Sorry, you guys are cracking me up. Smoked some weed and came across trading. Sounds about right.
Yep. Oh goodness.
Oh, yeah, it'll get you that'll certainly get you pretty creative, right?
In college, got the idea from my economics professor. I'm sure he was not profitable because he's still teaching. Oh man.
Yeah, what car did he drive?
Freaking 07 Accord or something, or 1968 hatchback.
Do you remember our business studies professor? The car he drove.
Oh, this is gonna be fun. We're gonna be giving some funny stories, guys. So just sit back and wait to laugh. It's gonna be hilarious. All right, so how do we first start? Well, we're not gonna lie. It was through, like most of you, it was through IM Academy. We were those people. And professional traders, whether that be us or another mentorship program, another group, another individual, they had to start somewhere. They're not these transcendent aliens who come down and are just automatically profitable and start teaching. Like, you all have to start somewhere. And whether that be through YouTube or through IM or through a friend or through whoever, there is always that foundation, that first initial moment, that story. So we're going to kind of go into, not only how we started, but how that relates to a lot of people in their psychology when it comes down to trading. So we first started I remember this was my freshman year of college. This was 6 years ago, something like that, maybe a little over that at this point.
Yeah.
And I was sitting, because we were in a fraternity. That's how I met Aiden. And, fraternities where we come from, and they were not real fraternities. I'll tell you that. It was really just, people thinking that they were cool. Anyway, we were in his, I guess, fraternity house room where he was staying. And it was him. Who was it who mentioned it to you? It was someone. He was like, hey, check this out. One of my friends, because one of his friends was a part of IM Academy at the time. And, he was like, oh, it's a easy way to make money. It's trading Forex. You can do it from anywhere. Obviously, we got that pitch, right? We were that people were sitting on the side of being pitched to join and try to get in their upline, of course. And we didn't know at the time. We were just, ignorant people just wanting to make money. I had like $300 or $400 to my name at the time. This was like freshman year of college.
Same here. It was actually my just a random person I met at senior year prom from high school, who I just happened to follow on Instagram that night. And then a couple years later, I see him posting his like $13 in profits on Forex. I'm like, oh shit, I could use an extra $13. So I hit him up, and that's where he told me about FX. But of course, it was tied into good old IML. But yeah, sorry for cutting you off, Nate.
Yeah, no, you're fine. So at the time, IML, we didn't know anything about them. We joined. I think it was like $200 or maybe $150 at the time to join. Whatever that was. So we joined. We were just kind of messing around, and we joined this group. I'm not going to call these people out. They were hustlers. They weren't real traders. Obviously, they were complete cappers, to be quite honest. And we started taking signals. Again, we had no idea what signals were. We were just like, oh, okay, well, we have no idea what we're doing. Let's just take some trades that they send us. Maybe they know. Maybe they'll help us make
Follow
money.
the mantra, copy, paste, profit.
Yeah, exactly. So I remember, and this was actually my own trade. I funded my first account with like $200, like half my net worth at the time. And I placed my first trade. I had no idea what risk management was. I placed it on Bitcoin, a 0.25. Imagine if you know about Bitcoin trading, 0.25 is a lot. Like you can blow your account in a matter of minutes or even seconds. And I ended up consolidating for like a minute or two. And then I made a move and I blew my account first trade. And I just remember sitting there like, what in the actual heck is going on? And that's kind of how it first started. First trading, first blown account. And it was just ridiculous, right?
You should have seen the devastation on Nate's face.
Yeah, I know.
Watch his account go to zero within a very short period of time. He looked like he wanted to cry.
Yeah.
It was a sight to see.
Yeah. Oh, I mean, $200 was a lot of money back in the day for me. but you know, my point is that everyone has to start somewhere. Everyone has to get their feet wet. You have to start at some point in time, and you have to just experience the failure and learn from it. There is no secret sauce out there. There is no golden strategy, which people seem to want to try to find. And because, you know, people who keep failing and failing, they keep hopping around, right? You go from one group to the other. That's kind of what we were doing. And I'll kind of go into some stories there about how we were hopping around from group to group. I'm not going to name those groups. I don't want to call those people out. But it's really interesting to see, because you look back on yourself 6 years ago and you're like, what is your problem? What were you doing? But again, you know, you can't blame yourself because you didn't know anything about it. You had to just, like I said, get your feet wet and just jump right in and just see what happens. And you have to learn through experience. That's it. So at the end of the day, guys, how we're going to run this entire webinar is this is mostly going to be through, it's not going to be a lecture. I promise. I'm not going to sit here and just ramble on about psychological problems. No, this is all going to be interactive. You guys can chime in whenever, share your stories. It's going to be pretty much stories from our end, but it's also going to be a learning experience that you guys can take and hopefully resonate with, because we're going to go through all the stages in which we, you know, from a beginner to an intermediate trader to that breakthrough moment, right? So exactly, you have to be able to crawl before you walk, right? And that requires failure. You stand up, you fall, right? And you have to go through that challenging time. And it may be confusing, frustrating, of course, but that's just what you have to do to go through and learn a new skill. So
let's hear some of their blown account stories. I'm sure y'all have some good ones too.
Yeah, drop it down here.
What you got? What stupid thing did you do? Blow your first account?
Mm-hmm. You always say you learn from institutional trader. What is the name of your teacher? It's not a big secret. We're going to get into that. Don't worry. We'll talk about that. So really quick disclaimer, guys. You know, we are not disrespectful people. However, our teaching style may come across as slight rude in a sense. It's not me trying to be disrespectful to you. It's me trying to help you learn the right way. And through my mentor, which we will go over and talk about here in a little while, that was the harsh reality for me. It's like it was not always fun working with him. Why? Because he was very hard on me. And it turned out to be a good thing, because now I have that mindset and I was forced to do the right things and produce the right habits for myself. So my disclaimer to you guys is, if you guys at all are any, sensitive to, what's the right word?
You get triggered easily.
You get triggered easily, right? Please, you don't have to be on here. You're more than welcome to just hop off, and that's it. All right. I'm going to go through some stories, and I'm going to say some things that will come across as quite harsh, but it's the truth that you all need to hear. Because I consistently see people coming and messaging me, and I scroll through the messages, and they've been messaging me since 2020, 2021. And I'm like, you're still messaging me the exact same stuff as you were messaging me back 2-3 years ago. It's like, why are you not listening to what I'm telling you? And it's just the people who just don't care. They just want the easy way out. So I'm not going to hold back. I'm not going to sugarcoat anything. That's not how you learn. My mentor never did that to me. He was a hard ass on me. So I naturally am a hard ass on my students, not in a disrespectful way, but in a way that, because I really truly care about your development and I want to see your success, but I'm not going to sit here and hold your hand and tell you everything's going to be all right. You have to learn through failure. and you have to learn through the hard truth. And if you can't handle that, well, then I'm giving you the opportunity to just leave now, because this is not going to be the webinar for you. Now, of course, this is going to be fun. We're going to have fun. We're going to laugh. We're going to have a good time. But at the same time, I still want this to be a learning lesson for all of you, because I'm going to go through my stories and teach you guys how I was able to handle all of this. Because it was not, there were times where I wanted to quit. I cried myself to sleep, literally. College student, literally sitting there crying. Yes, because this was something I was very passionate about, but couldn't seem to understand and didn't know why. So we're going to be going over a lot of things today. And hopefully that, produces a fire within you guys to go out and, inspire you to not just to keep going, but to practice the right habits. It's not all about soaking in so much information and trying to go out and buy all these different courses, right? It's not about that. It's about learning one particular strategy and sticking with it and producing the right habits, not only within your trading, but within your personal life as well. It's so important that you get your personal life as disciplined as your trading life. They have to be in alignment with each other. Right, exactly. Edison failed 10,000 times before he got the light bulb, right? It's consistency, it's persistence, it's, adjustments, but at the same time, it's not changing your entire methodology. Traders oftentimes, and this is what we did, is when we didn't see success instantly, especially within IML, because quite frankly, they're not real traders. They're network marketers. It's a great business model for them. I'm sure they made a ton of money. Congrats to them. They're hustlers, but they're not real traders at the end of the day. Because quite frankly, I was a part of a group and I asked them, well, what are the key levels to Euro USD? This was actually after I became profitable and started Ariel Fx. I was kind of trolling them. Shouldn't have done that. That was unprofessional of me, but I did it anyways, and they couldn't tell me. They just laughed. And it was a funny story. I'll kind of get into that in a little bit, but it just goes to show you guys have to be involved in people who have done it before, who can give you the right information, and not people who can just promise you, a wealth of, materialistic things. Like you see people on social media flaunting Lamborghinis and Ferraris and stacks of dollar bills. You see us doing that? No, we don't. Could we do that? Yeah, we could, but that's not who we are, right? We're not going to go out and do that because that's not going to help you.
No, it does nothing for you, but set wrong expectation for you at the outset and get you thinking about the wrong things, right? You need to be focused on, your own experience, your own application of the concepts, and looking at a Lamborghini or looking at a stack of cash or anything like that isn't going to teach you the hard lessons that you need to learn in order to actually get to, that level. So, IM Academy.
Yep. So after sort of that first experience in our fraternity house, when I blew my account, every day after that was just a grind, but we weren't producing in ourselves the right habits, right? We would wake up every morning, we'd go to class, we would essentially almost kind of put class in our other relationships before trading. And not to say that you guys have to prioritize trading in your life. You always have to find room for fun and games and your family. And of course, never, ever, take that and put it aside. But we were doing that too much, but we were expecting too many results because we were dependent on the groups that we were a part of. We thought that these people who were leading these groups were going to get us to where we want to be. And I feel like that's sort of the deal for a lot of you here today, is you are a part of groups waiting for those people to help you get to where you want to be. For me and anyone else out there, I don't care if it's me, George Mortimer, ICT, BSAPs, you name them. I know all of those people personally. However, what's common, the commonality between all of us is that although we have our own style of trading, we cannot hold your hand and get you to where we want to be. We can only provide the right habits, the right psychology, the right education, the right guidance. It's ultimately up to you to get to where you want to be, but it takes practice and consistency in producing the right habits. It's not just about understanding the concepts. Trading is just 20% of your success. Psychology, habit development, consistency is 80%. That's what we teach in one of our courses. So we were hopping around from group to group all day long. Again, I'm not going to mention all these different groups, but we were part of a lot. And we would wake up every single day and then check our phone, like, oh, did we get a signal? Did we get a trade idea? We would go and place it, go about our day. If we won the trade, we would be like literally jumping up and down, like $50 was a ton of money. And we had no idea why we won.
What we also did, especially like really early on at the outset, when we were, just taking signals, like as part of IML, is we would get one signal and I would, Nate would go, or I would go, Nate, what lot size should we place on this? Because we would have like joint accounts too. And you go, oh, just throw a 0.2 on this one. And then another signal would come around like 10 minutes later. And we would arbitrarily assign a different lot size to that trade, irrespective of the stop loss or just a complete random allocation of position sizing across different signals. So imagine even being inconsistent with, like, if you're just taking signals, at least be consistent with the way you're managing the risk or the way you're placing your. We couldn't even do that, and that's why we just kept continuing to run down accounts, lose 50% of the value of the account, and then, oh, it's all right, we'll just refund it, we'll just reload the account, we'll put more money back in there and start over at that same balance, so we feel good, so we feel okay, like we haven't failed yet. And it's just a complete cycle and rabbit hole to go down that I feel like probably, let's be honest, most of us have. That's kind of where we started out, right? And let me know if you think that sounds about accurate for where you were when you first started and when you were taking. Yeah, it sounds like me exactly. Just not a good spot to be in, but you never know unless you actually experience that, right? Unless you fail from that, and you finally come to the realization. Right. Yeah. Everyone says yes. You finally come to that realization right after just, it's like you're running on a hamster wheel, right? You're going nowhere. And that's when, you make that next decision to actually try to learn how to do it yourself, as opposed to, just taking signals.
Right. Because signals don't really work in the end, even though the signal provider could be really good in terms of sending out signals. People are going to find ways to mess it up, right? You're going to take a couple of losing trades, and then you're going to get, emotional and not take the next one because you feel like the next one's going to be losing. Then that one could be a winning trade. And, here, let me do this really quick. I want to show you guys something. I'm going to present my screen here. And I want to pull something up for you. I'm going to pull up my own track record. Now, I think I'm going to stop doing this track record just because it's a pain in the padded butt to go every single day and just update this. I think I'm just going to post my MyFX book, to be honest with you guys. It just might be easier. But how this works, and especially this is a really good example. In March, so last month, we didn't have the best start to the month. So if you were taking, these are not signals. This is within our VIP community in which we are sending all of this analysis, but we're not strictly telling you, when to buy, when to sell, where our stop and take profit is. So I'll pull up like something like this. This is something that you would find, right? Just a basic piece of analysis and exactly what we're looking to see. I'll just pull up a random one here. Right, another one. Basic piece of analysis, kind of just showing you exactly what we're looking for.
No, it's not pulling up for some reason, Nate.
Oh, it's not pulling up. Oh.
No, it must be because you're sharing one particular window.
Oh, I see. Okay, sorry guys. So you guys didn't see that. I was just pulling up some charts.
Chart markup.
You can see this, right?
I can see the spreadsheet. Yeah.
Okay, cool. So how this works. This is how someone in a group. This is especially how I worked when I was in a signals group. When I was in an educational group back when I was not profitable, before I met my mentor. We were a part of tons and tons of different groups, and all we would care about is trying to make money. We never cared about risk. We never cared about learning the strategy. We never cared about developing the right habits. Heck, bro, we would be placing on a Friday afternoon during a freaking darty, which is a day party in college, placing trades nowhere even close to the market closure, and we would just be over leveraging like crazy trying to pay for our alcohol for the day. Like, that's how bad we were, and that's how bad the mindset of a lot of traders are. That's just what they think they can do as long as they follow someone in their trades who are a good trader. So
taking signals during Asian session on Euro USD at 7 o'clock at night. And, you shouldn't be trading Euro USD during Asian session. It's not an Asian session pair.
Right. It's just those tiny things. And that's why you have to have a trading plan, which, by the way, if you guys don't have a trading plan, you want ours, I'd be more than happy to give that to you guys. Just message me afterwards. So it's completely free. I give it out to everyone. So how this works is typically, let's say we start signals on the first, right? These are not signals again, but let's just say they were. So, we're break even. Maybe we closed and I relatively break even after TP1. Then we go on a little bit of a losing streak, right? We lose a couple trades, boom, boom, boom. Now we're sitting around here, right? The 3rd of March, 3 days in. A lot of traders are like, wow, I just lost 3 trades and I broke even on one and I barely made any money on one of them. So what they do is like, I don't really know if I want to take the next one. And then maybe they miss out on another one. Again, this was closed break even after hitting TP1. Then they see like, oh, we ended up winning that trade. And then they lost a couple more. Well, then they're like, you know what? Screw it. I'm done. I'm leaving. I'm going to the next group, because they're not seeing instant success. And when someone doesn't make money every single day, every single week, every single month, and when they start to fail, they automatically think, oh, wow, this is going to continue. These people suck. These people don't know what they're doing. These signals are awful. I'm going to go to the next group and try to flip my account. So they go, they leave. They're like literally like a duckling and their mother duck, right? They're just following the profits online. They're just continuing to move around. And when they see profits, they just flock over there, like zombies trying to feed off of someone who's alive, right? It's literally that ridiculous. And I see it all the time. So when people are flocking to profits because they're so enticed by social media posts, when in all reality, guys, if you use common sense, a lot of that crap out there is totally fake. Like I saw someone who posted something who literally has like 13 followers post something that they made like $2 million in a trade. I mean, come on, let's be real. Like that's not real. So, but that's what everyone does, is because they're so enticed by profits. They're so enticed by lifestyle. They're so enticed by money that they don't ever want to, learn from someone who actually has value. They're just looking for something like a quick flip, right? So then they leave the group. Now we actually start hitting a couple trades, 5.4%, 7%, 1.3%, 1.6%. Obviously, we're going to have losses in between, but then we are posting all that stuff on our social media accounts, and then they come back to us because they're seeing all these profits. Again, their mother duck moves, the duckling moves with them. That's essentially what it is. So they keep walking back and forth to profit. So they're always taking the losing trades, never taking the winning trades, because they're quitting before the winning trades come around. When in all reality, if they had just stuck with that group for the entire month, then they would have caught all of these moves and they would have ended up in big profit, because it doesn't matter how many trades you lose. You guys can see probably most of them, especially in the month of March. 2023 has not been kind to us. However, we've still been profitable nonetheless because of our risk to reward and our consistency within our trading. You can see minus half, minus a half, minus a half, minus a half, minus one, but +4, +7, plus, whatever, +1, +2, +5, it all adds up. And if those of you who are, so emotional when it comes to trading, you shouldn't be trading with live capital. You really should, because psychology needs to be mastered before anything else. So again, they follow the profits. When they start failing, they quit, and then they see profits again. I don't know how many times people have come back to our group to join again. I can name a couple off the top of my head, but I'm not going to call them out. But I know that at least someone, and I can picture him in my mind. It's a he. He came back about 6 times because one particular week we had a phenomenal week, posting all this stuff. Then he joins again. Again, it's the same concept. Mother duck, us, post profits, all the ducklings, they follow the profits. And then when they go on a little bit of a losing streak, they quit. That's how it works. But if you were to be consistent with it and not care if you lose, because the individual or the group you're a part of is consistent in the long run, you're always going to, well, not always, but most of the time end up in profit. Now, personally, I did not make 29.05%. I don't take all of these trades. This is just me taking everything that I post in our VIP group and just collecting the data on to see if I had have taken it, would it have worked out? Just going through the basic rule of thumb to say, take profits are set at the previous high and low. Once first take profit is met, stops to go break even. That's why we have a lot of them that are, closed 1.35 or close 0.6 or whatever. That doesn't mean that we had a 0.6 risk to reward. It just means that we take profit one based upon splitting up of risk through how many different TPs and entries we had. That's how much we actually profited. So it's literally calculated down to 0.1%. So it's very accurate. So if you had have taken them as signals, again, if you maintained your psychology and not cared if you lost 3, 4, or 5 trades in a row, if you had good risk management, you're going to end up hitting your home run eventually. And that is why professional traders do not care if they lose. Professional traders really, if you look online, go to YouTube at some point and look up an interview with any professional trader. As long as they talk about win percentage, most of the time they're going to say the most professional traders in the world probably do about 50, maybe 55, 60% win rate, because they're not focused on their win percentage. They're focused on their risk to reward and the maintenance of their consistency and their discipline. Because if you know,
they think about things in the sorry to interrupt, but they think about things in the holistic approach, right? What are we seeing statistically in the aggregate? And I think someone said consistency includes losers as well, and that's absolutely correct. Because if you think about a standard marketplace, right, like the S&P 500, right, where it's always touted as, oh, the S&P since its inception has done 8% return consistently per year, right? Well, that 8% per year average, right, that everybody touts includes the bear years. It includes the years like last year when the S&P was down 15, 20%, right? And so, but if you think about it in the long run, it does average a positive, 6, it's debatable, but 6, 7, 8% return per year. And that factors in all of those times when the markets aren't in your favor. And then all those times when they are. And so it does average out. And so you kind of have to have that same approach, step back, stop thinking about everything in the microcosm, right? And step back and think about everything in the aggregate in the long run in a holistic approach, understanding that each trade is merely a transaction, right? In a series of transactions that ultimately over a month's period of time, a quarter's period of time, a year's period of time, because of the strategy that you're using, because of your trading plan, because you have consistent discipline with your trading approach, you end up with aggregate positive returns over and over again consistently. Sorry, Nate. Back to you. Just wanted to throw that in.
Yeah, no problem. It's funny you're reading your comments, guys. I love it. At a dark probably yelling to it's just funny, reminiscing on the past and just thinking like where I was before I became profitable, because you have to look at what kinds of things were you doing in your life when you were not profitable? Like, what do you do on a day-to-day basis? What do you do on a Friday night? What do you do on a Saturday night? Those are the biggest things. What do you do on a weekend, right? I'm doing webinars on the weekend. I have to get on a couple calls this afternoon. I'm working the entire day. I'm constantly grinding. I'm not telling you that's how you become rich. It's how you develop your brand and develop your skill set is by constantly learning. I'm not saying just work 24/7, but it's just look at where you were before. And if you are already seeing more consistency and more profits and more, discipline, what kinds of things are you doing now that you weren't doing before? And that's the type of stuff that we need to learn, right? So let's see what we have. I'm just kind of answer a couple questions here. It's so funny. You guys are awesome. Or can I order your cap? Yeah, probably. I mean, we don't really sell them. Yeah. We can probably order one for you. Just hit me up after the live.
Yeah, Charlie should be able to do that.
Yeah.
Got a few people. I wonder if Ted's on here this morning. Mr. Noor. Mr. Noor has a hat. Ted Noor.
That's right. A couple of you do, actually.
Yep.
So where I kind of want to get into next is sort of like the next phase of our journey, right? We were a part of so many different groups, right? Always hopping off from group to group. Once we had a bad week and we blew our account, not even having anything to do with the individual signal provider, had everything to do with us, because when we lost a trade, we would then just go into our account. I remember laying in bed one night. I don't even remember, it was during the week because it was obviously the market was open. I was laying in bed probably like 8, 9 o'clock, and I had placed a gold trade. And again, I think I had like $300 in my account back then. And I remember seeing that gold trade go to stop loss. And I was just so ticked off because I lost the trade. So I just placed like a standard lot on gold just to try to make it all back. And thank God it wouldn't let me. I didn't have enough margin to do so. But it would have lost anyways. And I ended up blowing my account probably the next week anyways. But it's that constant cycle of just wanting to flip accounts. And I think you guys all have that sort of, had that mindset at some point in the past where it doesn't come down to risk. It doesn't come down to percentages. It always just comes down to how can I make the most amount of money in the shortest period of time? How can I spend the least amount of money on my education to get the value that's going to transcend me into a multimillionaire? That's what everyone looks to do. And that's what we did. You know, we had a couple options for different courses. One was like $1,000. One was like $300. We obviously went with the $300 one because it was the cheapest way to try to get value. So we were sitting there watching the course and we were having our feel good moment like, oh, wow, this is a great course. And we were looking at it. It was a retail course. It was awful. Standing here now, I'm thinking, why in the world did I learn that? But at the time, I didn't know any better. I didn't know about smart money. So I was watching this retail course and it was awesome because in the moment, the courses are designed to obviously teach you, but they have to go back in hindsight and show you examples. You can't show someone live unless you're sitting with them live for hours and hours and hours, and no one's going to watch that type of course. No one has that kind of time. So in order to produce value and show you what it is the concepts are all about and how to trade them, you have to go back and have hindsight-based examples. You just have to. So that's what we do in our course as well. You know, we will go back, and I'm sure a lot of you have taken those courses and you're like, wow, this is amazing stuff. And we've had awesome feedback on it. However, it's what you do with that is the most important thing. We would go look at it, had our feel good moment, thinking that we're doing something good with our lives, and then we would never go and practice it, right? We always revert back to what we wanted to do or what we knew before, right? So, because if I teach a concept and you go in and you try applying just that concept and you don't see success instantly, you're going to think it doesn't work. You're going to think that, oh, it doesn't work. I'm going to go back to what I'm doing before, right? Perfect example would be this. Let's go to right here. Perfect example, AUD NZD. And by the way, there you go. It's for some free signals for you guys. I didn't delete those. But anyways, I created a video on higher time frame objective. For any of you who have watched that video on Cam's YouTube, so Trading at YouTube, I created a video talking about higher time frame objective. I'm not going to go through a whole breakdown, but essentially all of the price action and here, whatever is pointing to the upside. We're in a bullish market, right? So even if price were to go short, where do we have to look for? If price is going to go short, well, think about it just very simplistically. Lower low, lower high, lower low, right? So obviously we're in a bullish uptrend, so we're not expecting a lower low, and we're a lower time frame bullish as well. So we're following lower and higher time frame structure, which is both bullish. So if price is going to go short, and this is where we need to be placing our stops, right? You place your stops where price could potentially reverse against you. Not to say it's going to, or it's not what you're expecting, but if price is going to do that, you need to be putting your stops at those particular levels. So we can see just simplistically pullback, right? Or excuse me, expansion. This is the pullback. Expansion, where was the previous last buying volume? It's very simple. This was the last demand in the market. This was the last reaction from the demand that failed to generate a higher high above this high. Because if this demand was valid, we would have made a higher high, just like this demand in here was valid because we ended up making a higher high above that previous high, right? So that's our last buying volume that failed to generate the higher high. We rolled over and made that lower low. So that's my higher time frame objective. So my point is that when we were trading in here, I thought for sure, just like we had sell side liquidity, sell to buy continuation with the overall trend right in here. Sell side liquidity, sell to buy. This was an area of demand. I thought, okay, channeling up retail, sell to buy, and continuations into that higher time frame objective. So I said within that video, not exactly verbatim, but relatively kind of, I said, I'm going to leave it up to you guys. I'm going to leave it up to you to see it for yourself. I don't want to just go through hindsight-based examples, even though that's good for learning. I want you guys to actually see it and see this concept in action. So yes, I'm looking to buy here. The overall objective has not been met yet, but that's what I'm predicting. So go back later on, months down the road, or even a year, you guys can go back to this exact point and see if it actually worked out. And if it did, then you know that, what I'm saying is true. But even if it doesn't work out, it doesn't mean that just one time it doesn't work, it just doesn't work at all. And there was a person, I'm not going to call this person's name out, but there's an individual who commented on that YouTube video who specifically said, oh, I don't remember exactly what he said, but he said something like, oh, okay, so blah, 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 blah. If it doesn't end up coming up into 1.1240, then this concept doesn't work. And I'm literally there shaking my head, screaming in my mind, like, this is the worst type of mindset you guys can have. Just because something doesn't work one time, you automatically think it doesn't work. And that is the whole premise behind jumping around from group to group. You take a course, you try to apply it to the chart, it doesn't work. Well, no crap, it doesn't work, because you're not going to just see instant success. You have to have the experience with it. And then you fail, and then you think it doesn't work. You blame other people because you can never take responsibility for yourself. And then you keep going. And I was exactly the same way. Aiden and I sat in our college dorm rooms, and we were screaming and bitching and complaining about other people for our failures, even though we were the ones failing ourselves. And that's where I see a lot of everyone else doing the exact same thing. No one in this world, especially in this generation, knows how to take responsibility and hold themselves accountable for anything. They always try to find someone else to blame. Always. It's just like essentially bullies in school, right? The reason why they bully other people is because they have some underlying problem with themselves that they can't seem to deal with. They have that insecurity. So they lash it out on other people. Everyone who, comes at me for whatever. I mean, I've been doing this for 3 years. I've had my fair share of, people screaming and yelling at me, and that's fine. But it just proves a lot about them as an individual. And it just shows their immaturity, and it just shows there's something is going on in their life that they're not happy about. So right now, like I showed you on AUD-NZD, did it come into that higher time frame objective? No. But the analysis is still there, and we're looking to buy at our higher time frame demand levels up into that level. So yes, it hasn't come into it yet, and people are probably looking back and they're like, "This doesn't work. This concept doesn't work." Dislike. I don't need your likes. I don't need your comments on the videos. I don't care. I'm here to produce value. If you take it, great. If not, then that's on you, right? So that was the whole idea behind, everyone thinks that they have to find their strategy. And that's where we were. We were sitting there searching for people in our dorm room, looking for the best possible mentor that will get us to where we want to be, having no understanding that they cannot do anything to help us become millionaires. We have to ultimately do it for ourselves. But we were like, okay, well, this guy has all this profit. This guy owns a McLaren. This guy does this. This guy does that. A lot of these people out there, guys, they're just YouTubers. They're just marketers. They're just salespeople. They're not real traders. A lot of people out there. I'm not going to call them out again, but I know a lot of people out there who really don't know how to trade, but they present themselves as real traders. And it's very enticing, especially for people who are new. That's why a lot of you, just ask yourself the question, how many groups are you a part of right now? Like, how many groups? Don't answer it. You can if you want, but how many groups are you currently a part of? If you are a part of at least 2, you're doing something wrong. Why? Because you're trying to find something that works for you immediately and not focusing on one thing and being disciplined with that one strategy. You can't put together multiple strategies. You can't learn smart money concepts from this person and learn smart money concepts from this person. The two don't commingle. Everyone has their different way of looking at it, and it needs to be 100% on its own. One strategy, learning for years and years and years. You can make it work for yourself. You can. Right? And if you guys are just a part of one group, I applaud you. Good. Keep it that way. But make sure that group you're a part of knows what they're doing. Ask them for their track record. Ask
part of our problem, Nate, was also, we were looking for, courses. We were looking for value and strategy, but also, with a budget in mind. Right, with trying to find value at the cheapest price possible. Mm-hmm. And the analogy that I use for that is something like, okay, well, let's say, you've got a little money that you're thinking about investing into an equity security, into the stock market. And you say you have $1,000, and let's just say one share of, Amazon is $1,000. And so you could buy one share of Amazon for $1,000, or you can buy multiple shares of mom and pop's bagel shop, the brick and mortar company that's down the street, because it's cheaper. Well, you have to ask yourself the question, what actually provides more value? What investment has the most value and the greatest potential for a return on investment and scalability? Well, clearly Amazon over mom and pop bagel shop, right? And so the same thing applies to your education, right? And if you switch things around and say, oh, how can I, not spend all this money on the right mentorship, the right education, so I can save this money for, I don't know, prop firm challenges, or for putting $500 into a personal account that you think you're going to flip to $100,000. Instead, literally think about it as an investment, right? That ultimately will have an infinite ROI, because you need the proper education, you need the proper mentorship, and you need somebody to hold you accountable to actually apply the concepts consistently. And that's the key. And I think that's where you were heading with consistent application of things that are taught in the course. It's not just going to happen overnight. You don't need to, just take a course video or purchase a course and watch a video to make yourself feel good, like make yourself feel like you're learning, to make yourself feel like you're doing it yourself. You actually have to take the information that you learn in the course and apply it consistently over time, consistent application of it, not jumping from these different courses, different strategies, thinking that some crystal ball method is out there that someone can give to you, and all of a sudden your life's going to change overnight because you've learned some new indicator, or you've learned some new Fibonacci technique or something like that. That's never the way it's going to work, right? It's never the way it has worked. No one's become wealthy because they've been given some crystal ball tip or indicator or method. They've become wealthy because they've applied the concepts they've learned, the strategy that resonates with them consistently over time, and gained the experience live, applying those concepts live in front of live charts over and over and over and over again.
But not worrying about if you fail, right? Because I actually had a one-on-one call with an individual. He's part of our community yesterday. And we talked about the fact that consistency is the most important thing you can do. Understanding the system. If the system works, our smart money strategy works, but the people who quit are the ones who lose, and they don't give it enough time, essentially. There are a lot of people in our group who are doing insanely well. There are a lot of people in our group who are not doing well because they don't have the experience yet, right? So for those of you who are currently a part of our group who are not currently seeing consistency, it's not because the information is bad or anything else. It's because you just don't have the experience yet, right? You can't speed up time. Right? You can't speed up experience. And this is the thing. You guys can sit here all day long listening to us speak, which I'm not saying is a bad thing. I'm not saying courses are a bad thing. I'm not saying, all these webinars and all these podcasts are a bad thing. It's a good thing. It's good for information. However, the truth of the matter is that probably 90% of you probably won't take what we have told you and actually apply it. And you know what? Honestly, I can't really blame you, because at the end of the day, like I said, when our webinar first started, the only way that you're ever going to really truly learn is for you to I have to just let you fail. I have to let you experience blown accounts. I have to let you just experience losing in the bad mindset. And eventually, hopefully, it'll come around and really click something in your brain to say, wow, I really need to make a change. I really need to develop the right habits. Because I can sit here all day long preaching about risk management. People are still going to over leverage when they lose a trade, revenge trade, right? They're still going to do it. And until they actually do it and lose their accounts and go through some hardships in their life, they're never going to listen. They have to actually physically experience it first. And sometimes I just have to let them do that. So I was talking to this individual. His name is Tim. Great guy. I love talking to him. He's yesterday. And we talked about consistency. And we talked about how as long as you know that the system in which you're trading and your trading plan and your rule-based system and approach, your strategy is profitable, It does not matter if you lose 1, 2, 3, 4, 5 trades in a row. I will personally tell you, last week in my trading was really bad. That was probably the worst week I've had in a long time. And I'll be the first to say, I mean, we all have bad weeks. We all have bad days, but I continue to attack the markets the exact same way every single time, because you can't care about losing, because you know your system's profitable. So it's all just based upon risk to reward, building the right confluences. If I've lost, imagine this. How many of you who have lost 3, 4, or even 5 trades in a row, look at the next trade you see and you're like, I don't want to take this. Oh, I'm too scared of losing again. You can't do that, because first of all, if you're using good risk management, at the end of the day, it's a numbers game. If you're using good risk management, you're going to be fine, because you can lose 5 trades in a row, come back and hit a 1 to 7 like you saw on the track record, and boom, now you're back in profit because of 1 trade, even though your win rate is 10%, 15%, right? So you have to be able to lose and be patient enough to wait for your setup to come. But at the same time, when your setup does come and you have the right rules and confluences, be able to still attack it the exact same way. And that's where people fail with, because their psychology gets to them. And that's exactly where we were. We were totally scared back in the day when we went on a losing streak. We just got mad. We didn't quit, but we, moved away from trading. And even if we had a phenomenal trade setup, we were scared of taking it. Because 1, we knew we were going to lose a lot of money, because at the time we were over leveraging on trades. And 2, it was all in our mind. We weren't being realistic with it. We have to treat each trade as its own. If you lose 5 trades in a row, if another setup comes around, you have to be able to attack it the exact same way. Exactly. The next trade is never connected to the previous, right? So, let's see, let me go over some questions here.
It's a matter of embracing failure, right?
Yeah.
Nowadays, where we are in our journey, we literally do not care if we lose. You have to be able to get to that point. If you're still, throwing your laptop, punching your laptop, screaming when you lose, then, you're just not there yet, because it's obviously phasing you. You have to get to a point where you understand that every single trade at the end of the day is simply a business transaction. This is your business, right? You're the business owner. You're the boss. You have to hold yourself accountable. You have to embrace the failure and move on to the next transaction where all your rules are met. You execute regardless of the outcome.
Right. Because a lot of people, I think, treat this as a game. They treat this as like something fun with their friends. This is a market. You're involved in a real market. You're involved in real capital. This is real. This is not fun and games. If you want to have fun and go gamble, I always say, just go to Las Vegas. I mean, you can do so much in Las Vegas. Have you ever been? There's endless amounts of fun you can have. Aiden knows, but we won't get into that. But it's a lot more fun to go blow your capital while having fun, right? And doing other things, not sitting in your chart and being frustrated at trades. This is where always, the professional mindset will always do better over the amateur mindset, right? So,
yep.
And remember, it's all about risk to reward. It's not about all that stuff. So I'll have Aiden kind of go into, because we were a part of IML, and my whole point going back to it is, following the mother duck, right? Following the profits. Whenever IML came out with a new thing, for instance, if you guys ever heard of Gold Rush, I'm not going to say the name of the person who runs it, but we were, I remember it was like sophomore year, or maybe even junior year.
Yeah, that was a long time ago. That was an old school.
When that new product came out, we were like, oh, this is going to be crazy. And we joined back, paid the subscription, joined back again, and we did it. And then we ended up doing it for like a week or 2, and then again we lost, and it just totally flip-flopped, and we quit. We weren't consistent with it. But looking back on it now, I'm glad we quit, because quite frankly, those people really don't know what they're doing. I've heard through rumors that they're a lot better, that they've actually brought on actual real traders and not just network marketers. So I think the company is doing a little better, but again, nothing against them. They're very successful, and you got to give people credit when credit's due. But at the same time, we were always the one trying to find new things to become a part of. So that's just a big problem. So that's kind of where we were, 4 years ago, 5 years ago. And then Aiden had this internship that he had over the summer, and I'll kind of let him get into the story about how he, came across our mentor and all that stuff.
Yeah. So just by happenstance, a guy at my internship, I was just working at a startup company. This is like sophomore or junior year of college. He saw me marking up charts during lunch, and he told me that basically he trades or used to trade as well, but he has a really good friend who actually used to work in the banking industry as an institutional trader, and so he just literally just connected us. And the guy doesn't do mentorship. He doesn't do. I mean, he was retired. He doesn't do education or anything like that, but he agreed to get on a call with me, and I brought Nate on board as well, and really just doing a mutual friend a favor. And so around this time was when we were starting to discover smart money concepts and the way in which institutions manipulate the market, and how it's literally designed to take retail traders' stop losses, right? Everybody's trading the same way. The textbooks teach the same way. They tell you to buy off trend lines, support and resistance, and all that stuff. And it was around this time when I was starting to have, that epiphany of the true underpinnings of the market, and the nature in which the markets actually work, i.e., everything is ruled by liquidity, where the liquidity is resting in the market. Nothing else matters. There's no fibs. There's no trend lines. There's none of that extra fluff or garbage. The markets literally only move based upon where the pools of liquidity are located. You meet one objective of liquidity, great. You flip, you revert to the next liquidity objective. That's really all it comes down to. But anyway, I got on the call with him, and or Nate and I got on the call with him, and we were, basically explaining our discoveries of late, and essentially he confirmed it, right? And as an institutional trader, they don't trade smart money concepts, right? They're not sitting there looking for order blocks or things like that, inefficiencies the way we look at it. We're on the retail side. So we're only trading smart money concepts based upon the clues that are left from the institutional manipulation, and we're essentially, piggybacking off of those moves. But in all reality, he could see the smart money perspective from the other side and understanding why, basically saying we were onto something, because literally the markets are 1000% manipulated. All it is a manipulated market. And so, we really got into it, and I would say that more so that he as a mentor was the most powerful when it came to becoming a disciplined trader, right? Because I discovered smart money concepts. It resonated with me, and I started to apply it, but it was his guidance and his mentorship with psychology is where I, started to see that breakthrough, right? Teaching me that it's not just learning, the right strategies. It's not just learning the right principles, but also the right habits. And that's where, in my life, I started to get disciplined with things even outside of trading, right? With something like going to the gym every single day, right? It's a habit that you have to build if you're into wellness, if you're into just feeling good and being strong. And you go to the gym every single day, it starts to become second nature. It starts to become a habit. It's so difficult to start, right? And why a lot of people can't get into it is you just don't start it, and you just don't do it for the first, 4, 5, 6, 7 days. If you just do that, then it starts to become part of your routine, part of your habit, right? And the same thing applies to so many different things, you know, in your personal life, like when you go to bed, or what are you doing on a Friday night, or, you know, are you getting hammered Friday and Saturday and hung over the rest of the weekend and have brain fog and dreading the next week at work and going through the same vicious cycle that, you know, the rat race that we're all prescribed to, you know, to live in, or are you disciplined in that regard? Are you working on a Friday night? Are you working on a Saturday night? Are you making positive steps to make change for yourself? Right. And so all of those habits, all of those disciplines bridge over into trading, right? Into your trading plan, right? What is the routine that you have and the discipline that you build behind your strategy, right? So that you can consistently apply it over time. Yes, you're going to fail, right? And we failed for the first at least 6 months, even though Smart Money Concepts made all the sense in the world to us. Finally, something that made sense. We still failed for 6 months straight, right? We weren't profitable, right? And I'd say around the 6 month mark, you know, we kind of got to that break even point where we started to see that progress, but we really didn't see any positive success during that first 6 months. But because we had the continuity of strategy at that point, right? Because we were applying the same strategy, right? And we had, you know, a mentor looking over our shoulders, holding us accountable, making sure that we're disciplined with our approach, right? That's when the experience actually started to take place, and we could see, you know, positive outcome from consistently applying those concepts over time. And so Nate and I, you know, during that time, we literally went to sleep at like midnight, right? Just because we were so busy and we were grinding and we were on the charts 24/7. We had homework. You know, we were in school at that point, but we would get up at 3 a.m. to trade London session, right? We would have to nap throughout the day because we needed our sleep. Obviously, you know, sleep is extremely important to your overall well-being and your focus and being successful as a trader as well. But we would wake up at 3 a.m. and trade London session all the way through New York overlap. And we would literally just sit in front of the charts, watching live price action, watching mitigations unfold in front of our eyes, watching price trade into sponsor candles and react from them live time, inefficiencies, liquidity runs, time and price, when certain moves happen over and over and over again at very specific times of day. We started to see that because we were sitting there literally physically right in front of the charts. Now, we don't do that anymore, but we needed to do that back then. We needed that experience, right? That was critical to our, you know, to our progression in our journey, because it's way different if you just slept the whole night and then you wake up and you already see the mitigation has taken place, and prices moved off. We've had a unidirectional swing. I promise you, it's really, really different if you're watching these things happen in live time and you're tuned in to the markets. And that's really what we did, was we tuned ourselves into the markets. And that's where we really, really started to see, you know, that breakthrough was when we were just grinding all day and in front of the charts, pretty much 24/7, just applying the concepts and gaining the experience throughout different market phases. So I don't know if you want to add anything into that, Nate.
Yeah, I mean, and that proves the point. I mean, there's no secret sauce. There's no secret strategies, no holy grail, anything. It all comes down to just your experience and the time you put into it. And we're not saying to do, you know, work 24/7. Of course, you need to have time for yourself. You need to have time, you know, just relaxing, spending time with family and friends and doing the stuff that you actually enjoy in life. Because at the end of the day, it all comes down to, you know, the quality of life, right? But the people who really want to be successful are the ones who can, and every other point, you know, in their life, take all the unnecessary things and remove them. Like, instead of staying on TikTok and YouTube for 2 hours before you go to bed, why not read a book? Why not watch a course video? Why not learn a new skill? Whether that be, I don't know, basics of graphic design or basics of accounting. You know, there are so many people that I know, and there's this one guy who all he does, he wanted to learn a new skill. He's ambitious, and he goes and takes a course on QuickBooks, and now he has himself on Upwork, and he's just making extra passive income with his other job that he has and his other business And because he understands a new skill, he can make money from it. So it's always about just constantly looking to better yourself and develop yourself. And it really takes the right person, right? It's something that anyone can do, but at the end of the day, naturally, there are people who do it better than others. Because let's face it, it all comes down to what your habits are currently. Like, do you find yourself involved in a toxic relationship? Do you find yourself hanging out with friends who all they want to do is smoke weed and get drunk on a Friday night, Saturday night? Do you find yourself, just doing really unnecessary things that are not forwarding your ultimate goals? So at the end of the day, you have one life to live. How this world is and how we're prescribed this day is to go to school, which was created by John D. Rockefeller, I believe. He created university because he wanted people to succumb to what he wanted them to know, so that they don't go out, independently think for themselves, and overtake the business and the empire that he created. It's all a plan, right? Everything in this world is pre-planned, and everything has its purpose. So we're all prescribed to the same common core teaching. They don't teach you anything about financial literacy. They don't teach you anything about investing or taxes. They don't want you to know that, because they want you to be involved in the same rat race so they can control you. Even though you don't know you're being controlled, even today, you are. You really are. So it's the true reality. It's when you can step back and take a look at the world and get experience with it, you start to break out of the matrix. And we're not some conspiracy theorists, guys. That's not what we're trying to do. We're taking a look at true live examples, literally through our mentor, who confirmed that the markets are manipulated, right? If you don't know anything about trading, you're not going to know the markets are manipulated. Just like if you don't know anything about how the world works, you're not going to know that the elites of the world control everything. And the government is really just the minions. They're the puppets. They're the face.
So that could be a whole rabbit hole.
That could be a whole rabbit hole. We won't get into that. But again, what Aiden was saying about our mentor, he has asked us not to disclose his name. He has certain NDAs back when he was working with the institution. And, that's why we don't want to get into that. If you guys can respect that, great. But at the end of the day, that's not what you should be focused on. You should be focused on the value and the nature in which the market moves, and the value that we bring or others bring that can help you develop the right skill, right? It doesn't matter if I learned from a hobo or some institutional trader who's a multimillionaire, right? It doesn't matter. What you should be focused on is, if you are part of my group, what value do I bring to you? If I'm not bringing value to you, then you shouldn't be a part of my group. If I am, then great. It should be just very objective and not thinking about all the little tiny details. So like he said, the institutions, they don't trade. They're not on TradingView. They're not trading price charts, if you guys didn't know. They're not sitting there waiting for the smart money concepts to come about. They are the smart money concepts. They are the market makers. They are the liquidity providers. We are retail traders trading off the clues that they leave behind. They are simply the ones facilitating the transactions and pairing a buyer with a seller every single time. They're the ones who have their interbank algorithms, who, if you guys didn't know, our time and price is so important. Midnight sets the high and low of the day. The algorithm sets the high and low of the day based upon certain liquidity factors. And even before the day starts, price already knows the high and the low in which it's going to go and the range it's going to trade in. It's very, very specific and pre-planned. So he didn't teach us our strategy. We came across smart money and we developed our strategy through his guidance. He didn't teach us that, he didn't teach us about supply and demand flips. He didn't teach us about 2 a.m., 3 a.m. mitigation candles. That's stuff that we can look on the charts and see. We developed that strategy over the years. He's the one who is there confirming our essentially just confirming our strategy and confirming the concepts, teaching the logic behind it. Because these institutions, again, they're not trading price charts. If you guys didn't know, they're not. They're not sitting there on TradingView trading. They are the market. They are the ones facilitating the transactions and the orders. They are the ones finding liquidity from Coca-Cola, who wants to take their 100 million yen and transfer that over to dollars. Well, they have to figure out that transaction. How do they take that, facilitate that transaction in the live markets through how much liquidity is at a particular price, trying to find the amount of liquidity in order to facilitate that transaction, finding sellers and buyers and putting them together essentially. But they have ways of also, they have the order book. They can see the liquidity pools. They know exactly how much capital is resting. They don't need to know the candlesticks. They look at numbers. They look at, okay, $50 million in this particular region. It's going to cost this amount of money to push it down or up into that liquidity pool. Now they can start hedging in and out of their positions from a lower to higher time frame standpoint. Just like Aiden said, they have lower time frame objectives and then higher time frame objective points. That's why we teach higher time frame objective points, because it's important to know where the market's headed next. Liquidity is then taken. Where is the next drive cycle going to go? Where are the institutions looking to attack next, based upon the clues they leave behind? So I can probably write a book on all this stuff. I don't want to go into this. It's going to take too long, but essentially I feel like this is why we went from where we were, literally being the college students who are trying to flip accounts, to, thank the Lord, getting involved with someone on the inside to teach us not necessarily how to trade, but the right habits and the discipline and the psychology behind it to then break through. So very, very important. And it all comes down to a simple trading plan and sticking with it. If you guys can take 1 month, or maybe give it 2 months, and have a trading plan, have a set of rules beside your desk and a set of confluences, and follow that trading plan to the T every single time, controlling your psychology, which it's not something that we can teach, but we can't force you to do it. You have to actually practice it yourself. If you can do it for at least a month or two, I guarantee you're going to find so much more success than you are right now, because it's not about mastering the concepts. Yes, it's important to understand the concepts, but it's so much more. It's the underlying, not only underlying nature of the market, but it's that psychology and that discipline, that consistency that you need to do the same thing every single time, regardless of the outcome. You lose 2 or 3 times in a row, it doesn't matter. You apply it the same way the next time. It's getting into that professional mindset instead of the amateur mindset where everyone's just focused on how much money can I make? How can I flip this account? You see all these YouTubers, I'm not going to call them out, but you see all these YouTubers saying how I took 10K to $1 million, how I took $100 to $10,000. It's all a bunch of baloney. It's all clickbait. They just want your likes. They want your comments. They want your views. They're at the end of the day, they're selling their own package. They're selling their own signals. It's all just enticing you to join their service, because it's enticing to see, oh, how can I, as 95% of traders who probably don't have $1,000 to their name, can take $1,000 to $100,000. Everyone and their mother is going to want to hop on board. You have to think about it from their perspective, right? Not think about it from a consumer standpoint. Think about it from a producer standpoint. If the producer says, hey, this is what I can give you guys, if it's unrealistic, they're obviously just providing something. They're not real traders. They're just providing something that you can go pay them for at the end of the day. So you have to be careful with what you're buying out there and just be real. Have common sense, right? If someone out there is, and this is kind of where we're going to get into the whole algorithm side as well. I want to talk about this because it's very, very important. I've had a lot of questions about algorithms the past couple of weeks, and I think this is one of the biggest things we can hit on in terms of psychology. Everyone is looking for the easiest way out. Everyone is looking for the quick flip. Everyone is looking for the gem. Everyone's looking for that one thing that's going to make them a millionaire overnight. No one wants to go and do it themselves. Everyone wants to be handheld. Everyone wants to do that. It's true. It's how it was. I was like that too. I'm not gonna lie. I wanted to be fed signals. I wanted to flip my account. Aiden and I were sitting there, literally just begging someone to send us a signal. That's how ridiculous we were, right? Because we never wanted to do it ourselves. We were lazy. We would wake up hungover and skip class sometimes. This guy would walk in my room and just be beer bottles on my bed. It was awful. I have definitely changed a lot since college. I am not the same person whatsoever in any facet of life, but that's kind of where we were. And we had to deal with that. We had to be the ones who felt like crap the next morning being hungover, who blew their accounts, who didn't have the right habits, to realize this is not my life. This is not where I want to be. You go look at all these influencers. You could look at some guy named Tony Robbins. Have you ever known who Tony Robbins is? very well-spoken entrepreneur. He talks in a lot of like conventions, and he's a public speaker. I look at him and I'm like, what is he doing that I am not doing? What am I doing that he's not doing? Right. So, and I look at myself back in the day, I'm like, I have to make a change. And that's what I try to implore upon you guys is look at your life right now. If you are doing everything to further what you want, then continue doing that and never take no for an answer. If you are looking back and you're like, yeah, I just got on this webinar and I'm a little hungover. I had a couple of drinks last night. I'm planning on going out tonight and doing, whatever. Well, I'm not saying you can't go have fun, but just, you have to understand what you want and is what you're going to do today, tomorrow, next week, next month, going to further your goals. That's all I'm trying to say. So how this all ties into algorithms. And again, we are all students of the game. Aiden and I are still learning to this day, right? Not learning like our strategy. We already have that pretty much down packed. But what I'm saying is we started Ariel Fx in 2020. So 3 years ago. And about a year into it, we came across now our new partner, Charlie. Amazing guy, love him to death. And he was into algorithmic trading. He developed his own bot back in the day. And we were interested in it because we never really heard of it before, like automated trading, putting our strategy into code. Like that was really cool to us. And so we would be creating algorithms on our own, Aiden and I, and it would just be trying to, make 10, 20, 30% a month, trying to do things unrealistically. Even though we were good traders, we didn't know the whole world of algorithmic trading and how that's supposed to work, right? So I guarantee you 95 to 99% of you who have used algorithms before have probably failed. Why? Because there are two kinds of algorithms in this world. There are stop loss based algorithms, and then there are dollar cost averaging algorithms. There's nothing in between really. So either you have a stop loss or you DCA in some fashion, right? So this is what I'm going to do. That's what I'm going to do. The stop loss based algorithms, we have to understand the nature of the market, right? Understand what you're investing in before you invest in something. Please, please, please do not come to me asking to buy my bot if you have no clue what Forex is. I won't sell it to you because you're not going to understand it enough, and you're going to end up doing something that's going to mess yourself up. I guarantee it, right? You have to understand what you're investing in before you invest in it. It's common sense. We don't look at something and just flock to it. We don't have the, oh my gosh, there's $1 million over here. I'm going to act like the mother duck and the zombie, like, oh my gosh, I have to go. It's ridiculous what people do. They look at something and they're impulsive with their buying habits. Promise myself I wouldn't do that. I don't know why that's a lead. But,
I made him do it.
He did. Well, we're trying to have fun. Come on. But anyways, that's what people do. They're very impulsive, especially you get a promotion at work, right? You get a raise. What do people do? They go out and buy liabilities. They go out and buy that ATV. They go out and buy that boat. They go out and buy that nice Gucci belt. They go out and buy all this stuff, right? They're buying liabilities. What is a liability? Something that takes money out of your pocket. What is an asset? Something that puts money in your pocket. Is a house a liability or an asset? Many people think it's an asset. It's not. It's a liability. Unless you're using it for rental income. If you think that just buying a house for yourself is an asset, it's really not. It's an asset if the market appreciates, but that's not guaranteed, right? An asset is something that puts money into your pocket every single month or whenever the payouts are, I guess, quarterly, yearly, it doesn't matter. And that's what people do. They're impulsive with their buying because they're enticed by what they see. You know how many people and I'm a victim of this as well. I even scroll through, Instagram sometimes and I see ads, and sometimes I buy the stuff that they have. But there's a lot of ads that pop up on social media. How many times do you guys go and click on it and then go and purchase it? Because it's very enticing. Do you really need it though? Most of the time, no. But it looks cool in the moment, and that's what people do. James, you're exactly correct. Rich Dad Poor Dad, amazing book.
Yep.
It's just the fundamental of the mindset. It's really, really good. So that's a book that I definitely recommend, Rich Dad Poor Dad. It's by Robert Kiyosaki. So where was I? Impulsive buying. So how does it tie into EAs? You want MQL5? I don't look at that crap anymore. That's ridiculous. You want MQL5 and you go and see a bot that's done 10,000% return with like less than 5% drawdown. I mean, come on, use your common sense, like for real. And it's so easy to be enticed because it's hands off. You don't have to do anything. But the reality of that is they are literally taking a back test of that algorithm from a specific time that the algorithm did really well and presenting that to you to make you want to buy it. And especially if it is a stop loss based algorithm, we have to also understand that the market is ever changing. It's always adapting. It's always going to be different in the future. The concepts will be the same, but the presentation of those concepts will be different. Therefore, if you have code, aka algorithms that have a stop loss, you have specific criteria. Even though you're trading the concepts, you're looking for the same exact setup every single time. So when the markets adapt and change over time, sure, you can do really well with that particular algorithm for maybe a couple months or so, but eventually it's not going to work for you. But if you're making all this money in the short term, you're not going to stop trading it. And then all of a sudden, boom, now it blows up. Now it doesn't work, and now you've lost everything. So that's why you have to think of the long term in every single situation of your life. Not the short term. Trading in the short term, you're never going to get profitable in the long term. In the long term, if you don't let the short term bother you, the long term is always going to be there, right? Right? If you don't do well in the short term, you're not going to do well in the long term. If you do well in the short term, that doesn't necessarily mean you're doing well in the long term. But if you aim for long-term growth, then the short term is going to not necessarily be where you want it to be, but it's helping you to make it a very sustainable form of investing. So with EAs, the market's always going to be changing. So that's why you have to be doing data analytics, statistical analysis, and you have to be constantly optimizing and upgrading and updating your algorithm based upon the current market environment over a certain period of time. So we have data scientists who are working alongside us with our algorithms. We don't really have too many because we don't really have stop loss based algorithms. Now you're probably saying, oh, these people DCA. Well, I'm going to get to that in a minute. So that's why, when you buy algorithms online, that's all you're getting. That's all you're getting for the rest of your life. You're not getting any updates. Do you really have people doing data analytics and constantly updating your algorithm on a quarterly basis to keep up with the live market conditions? Probably not. That's why a lot of you probably fail with algorithms in the first place. Now, dollar cost averaging, again, you have to understand what market you're trading in. If you're trading in Forex, right, and you're dollar cost averaging, so many people, when you hear DCA, everyone's like, oh, it doesn't work. Dollar cost averaging is a very rewarding type of strategy if done correctly. We went to a conference in Vegas a little while ago last year, and we were listening to a speaker, and this speaker, like dollar cost average, what was it? Something in real estate or something like that. I forget what it was.
S&P, I think.
Oh, it was S&P, really? Oh, yeah, I guess it was. So he DCA'd S&P, but he does it so professionally, and he does it the right way because everyone and their mother is trying to get 10, 20, 30%. Because think about it. If you have a $100 account or even a $1,000 account, if I said to you, I can get you 2% consistently every single month for the rest of your life, essentially, would you be okay with that? Absolutely not, because 2% on $1,000 is what, 20 bucks. You want $20 a month? No one wants that. But if I said to you, if I went went to my IG story right now and posted a $20,000 profit, everyone is going to be like, oh my gosh, what is this? I want this right now. Because they're thinking about it from a monetary standpoint and not a percentage standpoint. Then I'll tell them, oh, it's $1 million account. They don't care it's 2%. They're looking at the 20 grand and they're going to go and just, again, zombie and go and buy it, right? So they're attracted to that. But if then I said, okay, here, I've taken a $1,000 account over the past 10 months and have made 200 bucks. They're going to be like, what kind of algorithm is that? You only made $200? Because you're so focused on the wrong things. You're focused on the monetary side, not the percentage side. $200 on a $1,000 account is 20%. 10 months, that's 2% a month. That is a realistic return in the market. The best hedge funds in the world are doing 15 to 20% a year. Think about that. The best hedge funds in the world. You can go look it up. This is not secret information. Go look it up online. The best hedge funds, you can get their analytics. They're doing 15 to 20% a year. Why? Because they understand how risk works in the market they're investing in. Everyone and their mother wants 10, 20% a month because they only have $500 to $1,000 accounts because they don't understand risk. So when they're dollar cost averaging, just look at over the past 20 years of data, look, a random pair, GBP USD. the peak and the trough of GBP USD in the past 20 years. If you're dollar cost averaging, you're not ever closing in a loss, right? So look at the biggest swings and say, okay, if I am stacking my positions every 30 pips and increasing my lot size by a factor of 1.2, which is a typical dollar cost averaging system, which is absolutely absurd, you're going to blow your account within a matter of like 1,000 pips. You look at GBP USD, could have 8,000 pip runs. It's a ticking time bomb for disaster, ladies and gentlemen, because you don't think about the risk side. You're only thinking about how much return can I get. So how do you dollar cost average properly? Well, you have to take into you have to think about a lot of things. And I'm not going to go into my proprietary system and how we code ours, but just from a basic understanding, you first have to understand what a realistic return is in the market, and then understand what asset class or what market you're actually investing in. So we don't trade every single pair because we understand certain pairs have ridiculous higher time frame expansionary moves, which our algorithms wouldn't be able to survive. We only trade pairs that have relatively tight ranges on the higher time frame, so that if for some reason we buy at the top and sell at the bottom, we're always going to be still alive in that trade, even if it moves 2,000, 3,000, 4,000 pips in one direction, because we've done calculations, understand exactly where we need to add additional positions to the market based upon the market environment at hand. So based upon highly reversal regions like order blocks, everything's smart money related. So it's based upon that, but it's also about, in a sense, that initial win rate in a sense, because you want to, every single position out of 100 positions, if I can have 70 or 75 of those positions take profit immediately without getting into any drawdown, that's really good. The other positions may have to take a couple of extra stacking positions to get out, maybe another 10, 15 of those, and you have the other 5 to 10 that get into a little more drawdown. But even though those get into drawdown, based upon the current market that you're trading, what if it actually goes based upon historical price against you in that particular expansionary move? Are you going to be able to survive it? Everyone who's looking for 10%, 20% returns on DC algorithms, you're blowing your account, guaranteed. Maybe not the first week, maybe not the first month, heck, maybe for not the first year. But you will eventually, because you don't understand realistic expectations and you've never done data analytics or calculations. So this is why we are able to do about 1 to 2% a month consistently, conservatively, but understand that all you have to do is scale your capital, right? You have a $100 account doing 2% a month, that's $2. No one wants $2. They want to freaking wipe their ass with $2, right? But they don't understand that 2% on $1 million is 20,000. Everyone wants $20,000, but no one wants $2. It's the same percentage, the same exact percentage, but you're so focused on the monetary value that you neglect the percentage and you neglect, the conservative nature of the system. So where does this tie into psychology? Like I said before, I've had tons of calls of people going over our algorithms that we can probably do about 2 to 3% a month, conservatively, sustainably, professionally. But no one wants that because, quite frankly, no one wants 2 to 3% on their measly little $500 account. They want to flip their accounts, which, again, like I said before, you have to just experience that loss and failure to learn from it. So I have to let them just go blow their account. There's nothing I can do. But if you compound 2 to 3% a month, which is way more than an IRA or a 401k, or if you're in another country, whatever retirement plan you guys have, you guys are down right now, most likely. If you're in the United States and you have your, retirement fund, you're probably down right now, because in a bearish market, which is it's 20% is when it's technically called a bearish market, then you're 20% drawdown. You're not making any money. You only make money when the market goes up. So our algorithms probably do, conservatively, maybe sub 5% at its most, maybe 6, 7, 8% drawdown. But that is a professional, conservative, sustainable form of investing that will make you a multimillionaire over the next 30, 40, 50 years. If you're doing well, if you're constantly putting more money into it, now you're compounding it a lot faster. But again, it's for people who understand and have that mindset. Right? If you are comfortable at 2 to 3% per month, right? Doesn't matter if it's a $1,000 account. You're never going to be able to manage $1 million account until you can manage a $1,000 account. Same thing with trading. If you can't trade a $1,000 account, you're never going to trade a higher account size ever, right? but it's the same percentage. So if you keep adding to that account, or for those of you who maybe have more capital or even on prop firm accounts, that have funding, then the same percentage turns into a higher dollar base value or higher monetary base value. That's how we need to think in terms of trading as well, and not so focused on how much money we can make, but focusing on everything else that makes us the money. Mindset, psychology, the skill set, the actual strategy at hand, the discipline factor, risk to reward and not pips or money, the dollar base value. It's all about the other stuff. Everything else, if you're focused on learning the skill set, when you lose a trade, not necessarily get mad and scream and say, screw this and throw your phone across the room, but if you sit down and figure out why you lost and maintain the psychology to keep attacking the market the same way, you're naturally building that habit that's naturally going to turn into more money being made for you. But if you're focused on the former, meaning just how much money can I make, you're not doing it for the right reasons. So let's see. So that was a lot. So, and that's where a lot of people, go wrong in terms of prop firms, right? They want to get funded so quickly. They're so enticed by 100 or 200 grand. They keep trying these prop firm challenges, but in all reality, they're not even profitable. So what makes you think you're going to be profitable, even if you do end up passing the challenge? The percentages you say, 90% of traders, probably even more now, will fail a challenge. You're just spending money, not even being prepared and not understanding the investment in which you're making. You're impulsively buying something because it sounds enticing to have a $100,000, $200,000 account. But if you're not profitable, building the right habits, then you're not going to be profitable on your account, most likely. And everything is a probability, right? So that's sort of why I want to do this giveaway, in a sense, to help someone out, but at the same time, teach you guys before whoever the winner is, teach you guys how you need to go about trading that, right? This is not, because think about it. How many people? We have 170 people on here. Typically our live streams on Wednesdays and Saturdays have about 70. That means the majority of people on here are just here for the giveaway. That tells me a lot about who you are as a trader. That tells me you want handouts. That tells me you want the easy way out, that you don't want to work for it. You don't want to build the skill. You don't want to practice good habits and go through the pain and suffering of losing and failing. You just want the easy way out. And I knew that was going to be the case. So whoever the winner is, I pray you do well. I really do. But, that's another reason why we started this prop firm automation service to begin with, let alone our mentorship, in which we're guiding you day in and day out to facilitate the right habits and get you involved in the strategy that you truly need to learn, not any of the other trendline retail baloney. The real underlying nature of how the market works from an institutional mentor that we had to you guys. That is what we can give, right? But at the same time, then there are other people who are constantly failing prop firm challenges because they don't have the right psychology. They don't have the right discipline and the mindset, because they go out and spend tens of thousands of dollars. We did the same thing. I probably spent 15 grand or so in my day on prop firm challenges, failing because I wasn't profitable at the time. I didn't understand, realistic expectations. Prop firms are designed to have you lose, guys. They don't want you to win. And even on your funded account, they B-book you. They want you to lose. It's not real funding. That's why you have to do your due diligence as well. But so many people fail. And even if the ones that they pass, what's the percentage of people actually getting to their first payout? If the chances are sub 5%, what's the point in making that investment? Now you're just losing $500 to $1,000. Boom, down the drain. Because not only do you have to pass phase one, you have to pass the evaluation, then you have to be profitable your first month. It's so enticing with $100 grand, $200K funded account. You can make a lot of money doing it. However, statistically, people lose, right? So that's why we wanted to offer a way in which we simply just bypass everything. We get you funded guaranteed. Now we have a system that does that. That's what we're going to be using on this for the winner of this giveaway. We passing it guaranteed. If we fail, there are some other services around, you know, the world who do something similar, but they only can guarantee your service feedback because they don't want any liability. We're taking on extra liability and paying for your challenge as well. So we're literally going to be paying for your, if we fail, we're going to be giving the service feedback and the account fee that you pay to the prop firm back as well, making you 100%, not necessarily risk-free, but we're guaranteeing you get a funded account. And then in addition, based upon everything that we've talked about for psychological purposes, fine, I can give someone $100,000 account, but then what? They're not already profitable. So what makes them think they're going to be profitable running that account? So to take it a step further, what we've also done, and you can, for those of you on our VIP service, you can take the education you've learned and apply it to that account. But also at the same time, we are providing you with the exact trades that we're getting into on our personal account to help you make money on your funded account. Right? So that is how we can sort of bypass the whole problem with challenges, but also at the same time bypass the problem of failing your funded account as well. So obviously nothing's guaranteed, right? But it gives you a high probable chance to succeed with it, right? And we don't focus, like we said before, we don't focus on how much it's going to cost. When Aiden talked about when we used to buy courses for $100 or $200 instead of the right material that we needed that cost $1,000 or $2,000, right? Most likely, guys, the more expensive something is, probably the more value it's going to be, most likely. So, you know, we don't look at it from, oh, how much money is this going to cost me? I don't look at my investments that way. I look at what's the potential ROI that's going to have. If I have to buy something that's worth that costs $10,000 and the ROI is 10,000, to 1-to-1, it's really not worth it. If the ROI is 100,000 or $1 million, well, then it's definitely worth it, right? So the cheapest way out is really not the best way. If you're going to be cheap, you're going to get cheap value, right? So let's see. We'll go over some questions and then we can do this giveaway, guys. I know it's really highly anticipated. And I implore you guys, for those of you who keep saying, when is this giveaway coming? Again, it tells me a lot about your own personality as well. If you guys just want the easy way out, now we'll do the giveaway, of course. We already said we were, but really think about everything we've talked about through this entire webinar. And if you're just here for the giveaway, I promise you the chances of you actually succeeding in life with finances is very small. Because if you just want to get stuff that's handed to you for free, when you really don't want to learn a skill, you're not ever going to develop the right habits with your own money. And you're just going to become in the same cycle over and over again, trying to make money, keep failing, and it's never going to get you anywhere. So at the end of the day, congrats to whoever the winner is. But I implore you guys to go out and, you know, practice this stuff. Ask me questions. I'm here to help you. You don't have to be a paying member in my community to ask me a question. I'm not going to do that. I will gladly help you. So,
and yeah, we're not trying to put, you know, everyone in the same basket. I have no doubt that there are people who just are here for, you know, for information and to learn. But it's just the sad reality is that probably more, I would say probably a majority are here for the giveaway, but only you know that. Only you know the answer to that yourself. So
yeah, I mean, yeah. And we're not calling you guys out for that. And we're the ones who created this in the first place. We're the ones who said we're doing a giveaway. So I don't blame you guys. But what I'm trying to tell you is that you have to think about yourself, right? Think about, what are you truly here for? And if it's just here for the easy way out, whether that be just this giveaway or even just trading in general or with other groups you're a part of, or even in life, if you're here for the easy way out, trying to figure stuff out on your own and trying to do it the cheapest way and the easiest way without you having to work hard. I mean, again, I'd have to let you fail. You have to be able to just learn from your mistakes, and the world will come back and give you what you deserve. You will. For those of you who never give up, the world will reward you. For those of you who think that it's going to be easy, sure, you can make money in the short term, but it's always going to come back and get you. Let's see. Been in your VIP for a while, hands down the best money ever spent. Appreciate that, Ben. Glad you're seeing value from it. Watched you guys from the beginning of Trading Nut. heard about giveaway. Sorry, looking for the great information. Point that I'm making is don't put everything in the same basket. Everyone in the same basket. Yeah, of course. Yeah, just like he said. Let's see. What percent do you risk per trade? So I typically tell everyone no more than 1%, but when your account gets to a certain point, you don't really want to be risking 1%. I personally risk about 0.2, 0.25% trade. But for those of you who have, who don't have like a large account size, that's okay. Just I would recommend staying disciplined within your risk management, and no matter really how large of an account size you have or how small, don't go over 1% because, if you're over leveraging on trades on a $100 account, you're going to do the same thing on a $100,000 account. It's the same principle. So practice good habits now, so that later on, when you develop the skill set and you have more capital on hand, you already have those right habits. For how long have you been profitable for? We've been profitable for 4 years, 4.5 almost. All right. I'm going to go through, let's see. I'll answer a few more questions and then we will do the giveaway. When did your mindset change when you started becoming successful? Really, it was when I had a true mentor, the individual we spoke of. It wasn't IML. It wasn't everyone who was trying to network market. It wasn't everyone who was just trying to flip accounts. You have to get rid of those people in your life. It really started when I focused on my psychology in my practice, not just in my trading, but in my day-to-day life, right? Having a routine, right? Getting rid of alcohol, eating right, exercising, reading scripture. I'm a Christian. Right? I love to read the Bible. I love to read scripture. Love to read educational books. Get in the habit of doing those things, and it will transform the way you think. Therefore, transform what you do. I want to learn. Where can I start? Yeah. So of course, here's what I think, guys. What I don't want to come across as this is just like a pitch for our stuff. I don't want that to be the case. What I say is this: consider what strategy you would like to learn. Consider what you are looking for, what your trading personality is, and then go try to find individuals who have the credibility, who have the proof in the pudding, that can work with you and want to see your success, and who can help you and teach you. Mentorship is not a bad thing. It's a great way to get exposure into the system that has worked for someone before, that they can teach you all the bad things to avoid and all the good things to continue to practice. So whether that be us or someone else, doesn't matter. If you want it to be us, then if you head over to our website, arielfxtrading.com, you can book a free call with me. I'd love to talk to you about where you're at in your trading, how we can best assist you to see if we even can to begin with, because we're not for everyone. We have a very specific process in which we take our clients through. So it may not be for everyone. So that's why we want to have that call, and we don't want you to just sign up immediately. That's not what we want. But then obviously we talked about those algorithms. We do sell our proprietary algorithm system. But again, if you're not willing to grow your account over time, conservatively, sustainably, professionally, if you're the one who wants 5, 10, 20% a month, we're not the right fit for you. And we don't want to sell our algorithms to you because it's not going to be helpful for you if we have to increase the risk in order to hit your kind of, overall percent return goals. It's not, we do it the right way. If you guys understand that, then we'd like to work with you. If not, then I'm personally not comfortable with providing you with our systems. How many pairs do I trade? I trade about 6 or 7 pairs. It just depends. I love AUD CAD, NZD CAD, AUD Chef, NZD Chef, and AUD NZD. I love those pairs. Aiden doesn't really trade those pairs. He likes the majors. He likes EU. He likes GU. He likes AU. He likes NU. I do trade some of the majors as well, but I like a little bit more of the crosses. Our VIP is an all-inclusive lifetime subscription. We don't do subscriptions like monthly or yearly. We don't sell our courses individually. We don't sell our VIP individually. We don't sell our signals individually. It's all in one package, because the only way you're going to get the right help, again, it all comes down to If you take a course and we don't help you at all, we don't guide you, you're just going to apply that and you're going to see failure initially. It's guaranteed. But that's why we need the guidance and the education, the continuous education and the mentorship to help you along your journey. Same thing with our VIP. We don't sell that individually because we can't help you unless you understand how we trade to begin with. So that's why it's an all-inclusive. We don't want to do subscriptions because, again, that puts pressure on you as a student to try to make that subscription money back within your first month. Everyone wants to make their money back initially. It's not going to be like that. Remember, trading, we failed for when we learned smart money about 6 months. I've been failing for 18 months when we first started trading. So imagine going through and paying a subscription for 18 months and not seeing any success. People aren't going to do that. They're, again, going to then go to the next group to try to make money. And it's just the whole cycle of that. So, just like trading, mentorship took learning as well. We made adjustments, and that's why we've created this plan and this program that goes through the necessary steps and the correct steps. Let's see. 1% per month is 12 a year. Exactly. You do 1.5% a month, boom. You can do that consistently. You're up with the top hedge funds of the world. Seriously. We have our own private placement fund, our own investment fund. And when we first started, we were doing about 3 to 4% a month. We had this high net worth client come on board and he's like, I don't want to invest with you. Why? Because you're doing too much return. High net worth clients, wealthy individuals understand proper return. If it's too high, they understand risk involved is not something they want to put their millions of dollars in, right? It's all about perspective, right? Outbeating inflation, outbeating the benchmarks, doing way better than any retirement savings could give you. And being involved in something that's consistent, that's sustainable, that's not going to blow your account in a month or even a year's time, that you can hold for decades on end to provide yourself with generational wealth over the long period of time. I keep saying it, long term. So that's why we've adjusted our risk appropriately to the currency pairs that we're actually trading to yield about 1 to 2% a month on our fund. And that's where wealthy individuals really thrive. That's what they want. Let's see. Scripture is a major psychology book, best in my opinion. Yes. If you guys are wanting to learn more about Christianity, I'd love to talk to you more about it as well. It really has transformed the way I think as well. And it just brings me a lot of joy and peace. And that exactly, translates into trading as well. It's truly, truly helped. Top 3 books that can help with psychology. The Power of Now is good. I think I have it. Oh, let's check.
Yeah, Ryan, I'm pretty quiet.
Somewhere in my stack of books, I have it. But I don't really.
Think and Grow Rich.
Think and Grow Rich. Yeah.
Robert Kiyosaki's books.
Let me try to find
all Kiyosaki's. I like Tax-Free Wealth by Andy Wheelwright. He's Robert Kiyosaki's CPA. It's a very good one. Highly recommend.
If you guys want to check it out. Why the Rich Get Richer. This is an amazing book. Unshakable by Tony Robbins. Mentioned him a little while ago. Power of Now, I found it. It's awesome. Eckhart Tolle. Robert Kiyosaki, of course. Guide to Investing. And these are all books that are very easy to understand. These are books that are easy to apply and to understand even if you're a beginner. Business Made Simple. It's a very good one. And then obviously the Intelligent Investor I did enjoy. So I'm not a big book reader though. I will say that, having the experience on the charts is the most important thing. There's no book that's going to help you become a profitable trader. You just have to have experience, but it's nice to read. Aiden looks baked.
No, I always look baked. I don't know why. It's just my eyes like squint. But no, it's been a long time.
Yeah.
I don't do
All
that.
Right, so let's see. Yeah, The Alchemist is a good book. Awesome. All right, cool. Let's do this, guys. So I have a cup. I have a cup. It's a nice whiskey glass, actually. It's actually very expensive. Anyways, I have 4 slips of paper in here. This is how it's going to be. Listen up. What I want every single one of you guys to do, this is important if you're going to win. We have 4 slips of paper. One says YouTube, one says IG post, one says, YouTube subscription, one says IG follow, one says IG comment, one says IG like. I'm going to pull one of them out. Let's say it's an IG like. I'm going to go to the post that I tell you to go like, and I'm going to find whoever liked it or scroll through it, pick someone at random, and you're going to win. All right, but you have to do all of them. So I'm going to give it like 5 minutes. If you guys don't know our YouTube channel, it's just search Ariel Fx. Go give us a follow. Go subscribe to our YouTube channel. I can see everyone who's done that, so I can see all the names. If you already are subscribed, if you already are following, go unsubscribe, then resubscribe so your name pops up. IG like, here's the specific post I want you guys to go to. If you don't have our IG, it's Ariel __FX. It's a double underscore. Go give us a follow on IG. Go to the post, this one here where I talk about our prop from automation services, a little short reel. Go to that one, like it, comment on it, and then we're good. I'll give it 5 minutes. I'm going to pull one out at random, so you have to do all of them because you never know which one I'm going to give. And then I'm going to go pick one out, and we're going to go find a winner.
The book was The Intelligent Investor. Big Daddy.
Richest Man in Babylon. Yeah, that's a good one too. I haven't read that actually, but I heard it's really good.
Yeah, Kiyosaki talks about that one.
I think this is the question. The Intelligent Investor by Benjamin Graham.
It's Warren Buffett style. Ben Graham. All right, sweet.
Everyone has YouTube though. Here, I'll tell you what. I'll take one of them out to make it more probable that we'll get YouTube. Everyone can go to YouTube. Everyone has that. Just go look for us. So go give us a follow on YouTube, follow on IG. Go like that post that we created and go comment on it. I'm going to go scroll through it. Here's what I want as well. Go to our YouTube channel. Just type in Ariel Fx on YouTube. And then there is a video called our most recent one, 100K pass funded account giveaway, the one that we're doing right now. Go give that a like and go comment on it, and then I may add that into the mix as well. I'll tell you what, because I'm seeing a lot of you guys don't have IG. We'll take IG out, and I'll do YouTube subscription, YouTube comment, YouTube like, because everyone has YouTube. You guys you have a phone, you guys have a computer, you guys can go search YouTube. Make it for everyone. Is this psychology course over? Yeah, I mean, yeah, we're running out of time. It took about 2 hours. We'll answer some questions. Yes, guys, just go like it. Just go give it a thumbs up. Go comment on it. Just an easy way to get everyone involved, so I know like I can just pick someone at random. Yeah, so the webinar's over, guys. But if you guys do have questions, we're going to stay on here for a little while longer. What's the IG? It's Ariel __FX.
Just type it. You typed it in the chat, right?
Oh, yeah, I can do that. Okay, someone said like the minimum investment to start in case you want to book a call. Well, we do offer payment plans. So I would say probably if you don't have at least 600 USD, then it's not going to be, you won't be able to join, just because we have to we have to respect our value that we bring. We want everyone to be able to join. That's why we offer payment plans. But again, we still have to respect our value. So at least $600. The prop from automation service is going to be a little bit more. You guys can find that within our Discord community. If you guys don't already have that, I'll post it here as well. You guys can go read up about it. But it's really cool. I mean, a lot of people are getting funded. It's amazing. Here, that's a double underscore, guys. Double underscore. YouTube video you guys engaging with is this one right here. 100K funded account giveaway. So what we're doing right now. I think it's the most recent video on our channel. Let's go view it, go like it, go comment. I'll give it like 2 more minutes. Yeah, so the minimum dollar amount, guys, like I said, just if it's in regards to mentorship, I would say minimum is about $600, because we can offer payment plans on top of that. Because our program costs more than $600, but if that would be the minimum down deposit. In terms of our algorithms, our portfolio of 5, we have 5 different algorithms proprietary to our group. Again, very conservative, very professional, very sustainable. We can probably do 1, 2, 3, maybe 4% a month. But other than that, I mean, we can increase the risk however you guys want, but we don't feel comfortable doing so. And that, I think, we sell those for like $250 a pop. The portfolio is on discount for $499 total. Let me post our Discord channel in here as well. If I can find it.
It's like some people can't find the IG. Yeah, it's at Ariel __FX __. Thanks, Clint. Appreciate the feedback.
Oh, that was good. I'm a big coffee drinker. I just drank about a whole pot. How many accounts are being given? Only one account. All right, real quick, guys, for those of you who don't know, to enter the giveaway, we're going to do this at 1:05. It is currently 1:02. Go to our YouTube channel. Just type in Ariel Fx on YouTube. Go give us a follow or subscribe to our channel. Go view this video. You can even type it in 100K past funded account giveaway. It's that one right there. Go look at it. Go like, give it a thumbs up, comment on it. Go to our IG. Follow us on IG. It's Ariel __FX. And the post that we want you to go like and comment on is this one right here. You see it's the one with my face in it. So the second one. This one right here. Awesome. We got 2 minutes and we're going to do it. Give people a couple more minutes. I'm excited.
Moment everyone's been waiting for.
Who's gonna get our funded account? Whose life's gonna change? So we have a cup, guys. I'm gonna choose. You don't know which one it is. If I have to do both, IG and YouTube. See which one.
Yeah, when did Cam want us? When are we doing
live trading sessions again?
Back on live sessions again. Few weeks.
We have next weekend's off. The following weekend is off, I believe. Yep. So our first one back is going to be Wednesday, May 3rd. It's a Wednesday. Yeah. And then obviously we'll have our Saturday live May the 6th. So not until May. Here we go. Yeah, guys, I wish I could give everyone an account. You know, it's just tough because I know there's a lot of people. It's only going to be one winner, but I really do appreciate you guys joining in today. It really means a lot.
Yeah, I had fun. That was a good time.
Yeah.
Very
Weekly
informative.
breakdown will be posted tomorrow. Yes, we will be doing a Smart Money Sundays tomorrow.
Yeah, sorry I didn't do one last week, guys. It was Easter. I was with family.
Yeah, if you guys have any questions about anything, anything we talked about today, if you guys are struggling with anything currently, we have a psychology course within our program as well. I think it even might be available to purchase by itself, because psychology is it is
pretty cheap too, to be honest with you.
Yeah. But if you guys have any questions, of course, just reach out to me. I can type in my my Telegram. I just prefer that just because I use that the most. You can obviously send me a message on Discord as well, but best psychology course ever. Yes, let's go.
Thanks, guys. You guys are great. Much love.
You also, if you guys want to talk about, I would love to talk to you guys about scripture as well. Christianity is an amazing religion. It is the only real religion, in my opinion.
I know. And the modern political scene and sphere and humanism and materialistic world that we're living in just, drags Christians down, right? And you can see the numbers went down severely, especially when the pandemic came about a few years ago.
Yeah.
So it's definitely a critical component.
Yeah. Even though I implore that upon everyone. It's another reason why I wanted to say that, because I have this platform able to share. Everyone. And I'm not shameful to say. Jesus is the only way to eternal life, and I would love to talk to you guys more about it as well.
I'm
belief and faith
Baptist
in him alone.
Francis. I'm Baptist.
Protestant. Baptist.
But I went to Catholic school growing up, so very similar anyway. But Jesuits.
All right, let's do this, guys. I'm gonna pull it out. Shake it up, shake it up, shake it up. All right, got one right here. We have. You can open it. YouTube. Boom. Okay, so I'm gonna go to the YouTube channel, and I'm gonna pick one. I'm probably just gonna do a YouTube like. Go to that post, and let's see who the winner is.
Moment of truth.
All right, here we go. We have tons and tons of people here who have just liked and comment. I'm gonna go to the comments because I can't see the individual likes. So I'm just gonna scroll through. I'm not gonna look. I'm just gonna I'll do this. I can't see this. I'm just gonna scroll up and down, top to bottom, and then pick someone, and it's gonna be Andy SPX. Andy SPX is the winner. So congratulations, Andy. You have won our $100,000 giveaway. Congratulations. Don't worry, guys. We will be doing another one of these in the future. I promise we will. This is something that I want to do to help you guys out the best possible way. Thank you all for your support. Thank you very much. This was awesome.
Appreciate it, guys.
I really wish I could do a giveaway for everyone, but of course it's not really possible. But we'll be doing more of these. Don't worry. Maybe we'll even do a 200K account sometime in the future. So Andy, send me a message, IG, Telegram, wherever. Send me an email if you want. It's at arielfxtrading.com.
Congratulations, bro.
At gmail.com. So congrats, guys.
We're happy for you.
Yes. Yes, Sunday Bible studies will be awesome. I would love to do that. If you guys are interested in that, let me know. I would totally get on with you guys on Sunday after I get home from church, and we can do like a quick 30-minute, 45-minute Bible study. That'd be awesome. There's an engine that picks comments around. Yeah, I'm not that technologically literate, so I don't really know much about it. But yeah, congrats, guys. It's tough. Again, I wish I could do it, give everyone an account, but at the end of the day, if it's something you guys are interested in getting, it's always available to anyone. We do pass accounts 100% guaranteed or a full refund, and we do provide trade ideas I guess you can call them signals if you want, to help you guys with your funded account as well. So definitely. All right. Let's see. Any last?
There's Andy.
There he is.
Congrats, man. Took off work today for this. Wow.
Yes. So that Discord channel, I'll just post it in here again. If you guys want to go check it out, just we give, you can even join the free channel as well. We post occasional analysis there. And if you navigate to the Get Funded section, you can read about everything that goes into it. How much to pass the challenge? It just depends on the tier. We have different packages depending upon what you guys need and what you want. I will say it's not all that cheap because it does guarantee you a funded account. However, at the end of the day, you know, if it costs $1,000 to do it and you have to pay for the challenge $1,500, seems like a lot of money, which it is. It definitely is. But at the end of the day, you're getting signals on top of that, essentially. So 1.5% of $100,000 is $1,500. You can do that in one trade. So that's why potential high ROI investment. But again, please don't drain your bank accounts for something like this. If you have extra cash on hand and want to dabble into all this stuff, then great. But what I don't want for you guys is to pull money that you're not able to lose. Obviously, we're guaranteeing you a funded account, but still, you should never go into an investment with something that you're not able to lose. Does the diamond package include? Yeah, diamond package includes everything, guys. Like we pass a challenge, provide signals for life, literally for life. All of our algorithms will even set you up with a call with our developer. He can talk to you about risk and return and put together a set file that's specific for your needs, help you attach them to your account. The only thing is you can't use our algorithms on the funded account just because of the like, for instance, one of the rules on one of the accounts is you can't hold over the weekend, which we're intraday, intra-week traders anyway, so it really doesn't matter. But our algorithms need to be held over the weekend, which is why it wouldn't work. You can use algorithms on the funded account for sure. You just have to make sure you follow the rules with them. And then you get full access into our VIP community that includes our Discord private group and all of our courses, and then mentorship with Aiden and I personally as well. If you're a math head, quant, yeah, it's good to understand math, but at the same time, you also need to understand trading as well. You know, you have to develop the right systems. But if you're looking at it from a pure dollar cost averaging standpoint, you can calculate the exact variables you need to put into an algorithm to be able to survive any move in the market in which you're trading. Obviously, that requires a very conservative algorithm, but it's sustainable. You don't drink at all? No, I'm not going to lie. I do, but you have to do it in moderation, and you have to. So how do I properly say this? It's not something that it's not an outlet. It shouldn't be an outlet for you. It shouldn't be something you just navigate towards when you don't have anything else to do. You do it when, you know, you're celebrating something or you're out with friends and you want to have a few drinks, but not something that's going to affect your state of mind or your discipline with your work. So I'm not saying alcohol is bad. I'm just saying you have to be able to handle it so it doesn't affect you. We're going to be doing a different giveaway. Like I'll be doing something different than what I did today. So you can create an IG. We post some things that are still very valuable there, but we'll do something differently. It changes the neuroplasticity of the brain. Yes, exactly. I actually could pass the challenge. I have good risk management, but I need funding. Can you help me? We don't have a prop firm ourselves, so you just have to, just go buy an account. If you guys feel comfortable, if you're confident, if you have a track record of at least like 2-3 months and you feel comfortable with trying a challenge, then yeah, go for it. But if you don't have any of that, then just don't do it. It's not worth it. Just delay that gratification and learn the skill set first. What's our Discord name? Mine is Nathan JJFX, I believe. If you're a part of the Discord community, you guys can find, like, even in the free channel, like what I posted, and just click on my name and send me a message. Do you accept people from India? Yeah, we accept people from everywhere in the world as long as you have the right mindset coming into it. Obviously, you know, funds need to be available. Like we can't I can't sell my stuff for like $50 or $100. You know what I mean? But yeah, I mean, I don't discriminate against anyone. That's not at all. If you guys have the right mindset, I'd love to work with any one of you. Yeah, I don't think I'll be able to run a Bible study through the Trading Nut group. I might set up my own stream, but if that's something you're interested in, maybe I'll send out a poll within the Discord or within the Telegram, within the IG to see how many people would be interested. And that's something I could probably do on occasion. That'd be fun. It'd be really good for you guys. It's truly helped me as well. It's brought me a lot of peace, a lot of clarity, a lot of just joy. Really. Have you ever thought about hosting a Zoom meeting with VIPs, taking a trade once a week or even a month? Potentially. We may be able to do that. We do live trading sessions when we hold live sessions every Wednesday and Saturday. Obviously, it's 1 month on, 1 month off. We're currently on an off month. But again, even if I were to do something like that, there's no guarantee that there's a trade that we're going to be taking live. It depends on what the market gives us. If there is a trade, great. Then we can talk about it and take it live with you guys. But if we're only on for like an hour, who knows if it's, if there is a setup, if it's going to hit at that exact time anyway. So, we can't just get on live trading sessions just to force a trade just so we can trade live. It's all based upon our rules being met and everything else.
Yeah, Wesley, that page is Charlie's working with a website developer. That page is under construction right now to get the prop firm automation details and information and links on the website for now. If you want to get started with the prop firm automation service, want us to pass your challenge, that information, all the links, that's in the Discord under the Start Here tab within the Get Funded section. I think Nate he's already dropped the Discord in the comment section here already.
I'll post it again just because we have a lot of comments going on. How can one hit those larger TPs if hold through news or the weekend? So I'm assuming you're talking about funding pips. So because of the news rule, you probably have to be in and out relatively quickly, probably trading the same concepts, having the same sort of approach to the market, just on relatively lower time frames so you can get in and out relatively quick. You can't neglect the higher time frames though, right? You can't neglect it. So you have to be doing top down. But that's just why I recommend, because we work with two prop firms. One is Funding Pips, one is Nova Trading or Nova Funding. Both of them are phenomenal, very credible. We've done our due diligence with them. Getting A-booked every trade on your funded account. So literally proves that you will be getting paid out. And we have people awaiting payout right now as well. So, but I will say, if you're not as disciplined in your trading, Funding Pips would be better because it forces you to be disciplined because it has specific rules just in terms of like not trading during news, using good risk management. Like they kind of have these things in there that forces you to do that, which is really good for you because it really helps you to not only grow your account, but maintain it, which is the biggest thing, maintaining your account and not blowing it month one. But also Nova, it's a lot more relaxed. The only rule is you can't hold over the weekend. But again, if you're taking our trades, we're intraday, intra-week traders anyways. So it really doesn't make much of a difference. Would we like to have holding over the weekend possible? Yes, but there are ways around it. We are swing traders. It depends, right? It really depends. Sometimes if we see an intraday setup, we're in and out within the day, maybe a day or two. Sometimes we hold for a few days. Sometimes there are trades that I take that are relatively higher time frame, like the one I talked about today very briefly on ADNZD. Those would be a long-term swing trade. But we tailor our trades that we send out specific to the prop firm that you guys are a part of. So either Funding Pips or Nova, depending upon the rules. And we give, like, I'm not going to give a swing trade on something like Nova or Funding Pips just because you wouldn't be able to hold for over a week's time, you know? Oh, a really good book that I actually bought for a friend is The God That Is There, or A God That Is There, I think. I forget the name of it. But that's a really good book if you're like new to Christianity and want to learn more. It's a really good, like, fundamental, getting you, just the basic understanding of what everything is. Because Forex is banned in India. Yeah, that's tough. I remember now. It is. We have a few people who are from India who trade like indices, but unfortunately, there's not much we can do about it. I'm not sure if. Yeah, I don't know. I don't know the answer to that.
Maybe you can set up an offshore entity. I don't know.
Yeah, you could set up an. I mean, you would have to do your due diligence, but you could set up an offshore entity and trade through the entity, maybe. All right, guys. Well, I really appreciate your time today. Thank you very much. Congratulations, Andy, if you're still on. I really, really enjoy speaking with you all today. We're going to be doing something similar sometime in the future. We're going to be doing giveaways all the time. I want to help you guys out the best way possible. So take care, guys. Oh, yeah. For you guys interested in funding. Oh, yeah. 4-hour algorithms. That's right. That's a good one. That's a really good one. Funded Trader Plus has no time limits, and you're able to hold through news and over the weekend. So for those of you who are interested in the algorithmic side, like our proprietary systems, that is a good prop firm challenge to take because it doesn't have time limits. Therefore, we can run the algorithms the right way, conservatively, with low drawdown, but it's going to take a few months for it to pass. But as long as you're willing to be patient, people have passed before using that. Yeah, that's totally, I forgot to say that. That's good. Anyways, guys, take care. Have a great rest of your weekend, and we will speak to you all Smart Money Sundays. And for those of you who are VIP, talk to you Monday morning. So take care, guys.
Thanks so much, everyone.
Peace. Cheers.
Cheers.